Limited liability companies, or LLCs, have become a favored tool among the wealthy for managing and protecting their assets. The appeal of LLCs lies in their flexibility, offering both the benefits of a corporation and the simplicity of a partnership. This structure allows individuals to engage in business activities while minimizing personal risk, making it an attractive option for those with substantial wealth. One of the primary advantages of an LLC is its ability to create a legal barrier between personal and business assets. This separation means that if the business incurs debts or legal judgments, the personal assets of the LLC's owners are typically protected. This legal shield is particularly appealing to wealthy individuals who wish to safeguard their personal wealth from potential business liabilities. In addition to asset protection, LLCs offer significant tax benefits that are particularly advantageous to the affluent. One of the most notable is pass-through taxation, where the company's income is only taxed once at the individual owner's level, avoiding the double taxation faced by corporations. This feature allows wealthy individuals to optimize their tax obligations, keeping more of their earnings. LLCs also provide privacy measures that can help maintain anonymity and shield ownership information. By registering an LLC, individuals can keep their names off public records, as the company itself is listed as the owner of assets. This anonymity is crucial for those who wish to keep their financial dealings private and away from public scrutiny. The use of complex structures, such as multiple LLCs and holding companies, further allows the wealthy to obscure their wealth. By layering these entities, individuals can create a web of ownership that is difficult to trace, effectively hiding the true extent of their assets. This complexity can deter investigations and make it challenging for authorities to pinpoint asset ownership. However, the use of LLCs raises important legal and ethical considerations, particularly concerning tax avoidance and evasion. While LLCs can be used legally to minimize taxes, crossing the line into evasion can lead to serious legal consequences. Regulatory bodies are continually monitoring and adapting to these strategies, ensuring that the use of LLCs remains within the bounds of the law.